Welcome back. I am Rahul Malhotra. Global markets are facing a historic crisis as the Iran war enters a dangerous new phase. Brent crude is surging toward $110 per barrel, following a massive joint strike on Iran's energy infrastructure. The strike on the South Pars gas field, the largest in the world, has triggered what analysts call the largest supply disruption in history. Oil flows through the Strait of Hormuz have plunged from 20 million barrels per day to a mere trickle. With Iran threatening retaliation against Saudi and Qatari infrastructure, the risk to global growth is no longer a tail risk. It is the central reality. On March 18th, the gift Nifty witnessed a violent reversal, plunging 345 points in post-market trade. While the Nifty50 closed the day at 23,777.80, the victory was fleeting. The post-market drop to 23,455 suggests a massive gap-down open of over 300 points. As we look toward the session on March 19th, we must map out the critical zones where the battle between bulls and bears will be fought. Resistance at 24,000 is now a heavy call-writing zone. Above that, immediate supply sits at 23,850. Support 1 at 23,400 is critical. A breach here will likely trigger a wave of aggressive panic selling. If that floor breaks, the next major support zone doesn't emerge until 22,950. In this high volatility environment, sector selection is paramount. You need to hide in defensives while avoiding energy-sensitive traps. Pharma remains a top buy and hide play. Defensive names like Sun Pharma and Dr. Reddy's are well positioned as they lack direct exposure to rising crude costs. It is also positioned positively, as rupee depreciation is expected to boost earnings for heavyweights like Infosys and HCL Tech. Conversely, you must strictly avoid oil, gas, and aviation. Input cost sensitivity will decimate margins for names like Asian Paints and Indigo. Beyond the war, two major macro triggers could amplify the market's pain over the next 48 hours. First is the US Fed meeting. A hawkish tone tonight could amplify the global selling pressure as high oil prices complicate the inflation outlook. Second is the threat of further Iranian retaliation. Any strike on Saudi or UAE infrastructure could send Brent well past $110. MK Global warns of a bear case where the Nifty50 could drop another 10%, potentially sliding toward 21,000. Remember, every $10 rise in Brent adds roughly 1.3 lakh crore to India's annual import bill. This is a time for discipline, not bravado. Protect your capital and watch the 23,400 level with extreme caution. Stay safe and stay informed. This is Rahul Malhotra, signing off.